Welcome back to the capital raising workshop. So this is session 5. We were only supposed to go 3 sessions. Go figure. David Monroe, CCIM strikes again. Well, this is supposed to be the final session. Getting investors through your system that we've been talking about this whole time, which equals in the online space something called traffic. So how do we do that quickly? You can obviously build your audience. And in session 1, we talked about Facebook groups and LinkedIn campaigns and how to create organic people coming through your messaging. But how can we speed that process up? And that's what we're going to talk about today. Today is about accelerating that process. So I'm going to go over an ad network strategy. And this falls under all the ad networks. It doesn't matter what network it is. They all basically copied Google until Facebook kind of surpassed Google. And now Google copies Facebook. So everybody copies Google and Google copies Facebook. So, but Google was first and created the first online ad network called AdWords. So we're not going to go into any specific ad network itself. We're just going to talk about the ad strategy. I'm going to go over an overall strategy first, and then we'll talk about the conversion strategy for actually finding investors and getting them into your marketing network so that you can start to build that relationship with them. So now that I've gave that all away, let's actually talk about what the agenda is for today. So we're going to talk about the 2-1-2 advertising strategy, and I'll explain what the 2-1-2 strategy is in a minute. I did not create this strategy. I learned it from somebody else, and I'm currently running this strategy for my own services. Then we're going to cover buyer persona. So when you create an audience inside of an ad network, inside that audience, there are multiple buyer personas. And so we're going to cover that because it's extremely important that you understand how buyer personas work. And this goes for anything that you do when it comes to any kind of outreach. Then we'll talk about the upside framework. And again, I did not create the upside framework. The same person that I learned the 2-1-2 strategy from also created the upside framework. So I'm really just regurgitating something I've learned in the past. But again, I am using it in my business today. Then we'll talk about ad costs, because the reason people don't run ads is because they're afraid that it's too expensive. It's not for them. They don't know how to do it, blah, 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 blah. Excuses, excuses, excuses. Get out of your head. This is the accelerated way to finding people and bringing them in your network so that you can have the ability to raise capital for a deal that you may find or get invited into. Then we're going to cover advertising strategy for owners. So this is going to be the conversion objective, and we'll talk about objectives when we talk about the 2-1-2 advertising strategy. Objectives are when you look at an ad campaign, you have you've got your campaign level, ad set level, depending on what network it's called. Some of the networks call it differently, and then the ad level. So there are 3 different levels. At the campaign level, the first thing you start to fill out, that is your objective. So for the advertising strategy for owners, we're going to talk about the conversion objective. And again, you'll learn that in the 2-1-2 advertising strategy in a minute. Then we'll cover homework and then have our final Q&A, because again, session 5 is supposed to be the final session, even though we were only supposed to have 3 sessions. All right, 2-1-2 ad strategy. Hey, Corinne, glad you're able to join us.
Oh, thank you.
All right, so here is kind of a pyramid. And what this pyramid represents is you should spend most of your time on cold branding, some of your time on conversion, which is actually getting cash flow into your business, or in this case, investing dollars, and then a small amount of time on warm branding. And I'm going to talk about how all these connect together. So the 2-1-2 means During the cold branding strategy, we're actually running a branding ad as well as a conversion ad. And that branding ad, and you'll see when we get to objectives, this is an engagement ad. So it's just value. And you'll see that it's very low budget because it's really low cost. There isn't any conversion objectives with a branding ad. You're just sending somebody to something of value. You want to warm that audience up because the majority of people that purchase from ads or engage with the person that's running the ads, they only do so after they've seen this person and their content so many times. I'm sure you guys have all heard in sales, it takes 7 touches before somebody actually engages. This is no different. And of course, that's just an average. It's just a sales number. Rule of thumbs. You guys know what I feel about rule of thumbs. Where a conversion ad captures those that make fast decisions, because even though we're advertising to people that do not know us, you're always going to have people that make impulse quick decisions. We don't want to lose them. So we run 2 different ads when we're doing cold audiences, one for branding and one for conversion, so we don't lose them. The conversion ad will be a little bit of a higher cost, but we'll cover that when we get to ad costs. For conversion ads, now this is where you actually are getting people to schedule appointments with you. They're engaging with you. Or if you're selling something, they're buying that thing you're selling, or getting on your email list. So a lead is a conversion. So if you send somebody to a lead magnet or a landing page that gives them a lead magnet to get their contact information, that would be a conversion. Those are higher costs for good reason. But again, we do not want to miss capturing, when we're doing cold branding, these conversion events. Now, these conversion events will happen over the lifetime of that customer or that client or that investor, depending on how long you're running your ad for. When you're running ads this way, you can go for a very, very long time without wearing that ad out. I don't know if you guys have ever heard of ad fatigue or not. You'll hear this in the advertising world where an ad will eventually just stop working. They call it ad fatigue. If you use this strategy, your ad will never have ad fatigue because you're constantly sending that audience to your content so they can see who you are, build trust with you, start to like you so that they'll engage with you, eventually schedule that appointment, become an investor, or, if you've got some kind of education program or coaching program, you can engage them that way as well in some kind of conversion. So that's the cold branding and the conversion. So if we're doing cold branding and we already have conversion, why do we need warm branding? Well, warm branding is retargeting. So the people that have watched, at least if we've done video ads, those that have watched at least 10 seconds of these ads up here, and your branding ad and your warm branding ad, your cold branding ad and your warm branding ad can be identical. There's no difference in it. You just run it to a different audience. Your audience now are people that have already seen your stuff. So these could be prospects that have landed on your landing page, have joined your Facebook group, watched a YouTube video, a TikTok video, whatever it is. Somewhere you've sent them where they have seen your content. That's retargeting. We're targeting somebody that has already seen us. So you're going to run again, a branding ad. And again, it can be identical. It does not have to be any different. It can be the exact same ad. And at the same time, again, you want to run a conversion ad. And really, this is where the conversions happen, is right here in the warm branding. Because as you'll see when we get to the personas, you'll have people that are going to hang around and wait and learn about you and understand you, build trust, likability, make sure you're transparent before they'll engage, schedule that appointment, do all those things. So as they're going through this up here and this down here, now we can get them into that conversion. All right. So this is how that ad strategy works. And it's freaking brilliant. All right. If people were using this, and I don't know a lot of people that do this other than this one guy that teaches this model. And so you guys know, his name is, forgot his name. It's Dominate Web Media. I talk about him a lot when I talk about Facebook ads. Anyway, his name will come to me later. His company is Dominate Web Media. All right, so let's start with conversion, because conversion is where the rubber meets the road, and it is where we're going to talk about the off-market, or not the off-market, the investor conversion campaign. So I want to start here because this allows us to be able to do everything else within the triangle. So in a conversion campaign, we have objectives. So campaign means we're setting up our objective. What is the goal of that campaign? All right, that's your objective. Is your goal to build an audience? Is it to get video views? Is it to create a like campaign if it's Facebook? Get subscribers on YouTube? What is that objective for the ad? All right. So in the conversion objective, now our objective is either going to be sales or it's going to be leads. In the case of investors, trying to attract investors, it's going to be leads, because we don't sell anything. We offer opportunities, but we're not doing that through the ad network. We just want to get them into our ecosystem. And I'm going to show you how you can do that without even talking about passive investing. It's actually really cool, because you got to be careful what you say in the ad networks, or they'll shut your ad account down. Just ask me how I know that. All right. So with Facebook and Instagram, which are the same network, the objective is called either sales or leads. And in your case, you're going to use leads. Google AdWords, it's the same thing. You're going to use leads. LinkedIn, it's called website conversions or leads. Again, you're going to use leads. YouTube, which is also Google AdWords. So YouTube doesn't have its own separate network. You actually go into Google AdWords to run YouTube ads. You just, before you select your objective, it'll ask how you want to run that ad. If you want it in their audience network, in their search network, or through video. If you select video, then it knows it's a YouTube ad. And then, of course, TikTok, they call it website conversions. All right. Now, obviously, for YouTube and TikTok, you must have video. You can't run a text ad on YouTube or TikTok. Those have to be video ads. For everything else, you can run either image, text, or video, or a combination. So the content here is an ad framework, and we're not going to go over any ad frameworks in this session today. That goes beyond the scope of this. I just want to cover the strategy. An ad framework would be how many, for every objective, how many ad sets do we have? And then how many ads do we have for every ad set? That would be a framework. Again, we're not going to go over that in this lesson. Then we have audience targeting. Okay, audience targeting will actually happen at the ad set level, or on LinkedIn, it's called the campaign group level. And for audience targeting, you've got stacked interests. So you can go in and select interests. When you select multiple interests for an audience, that's called stacking the interests. The more interest you select, the more audience will show up. And you can narrow that down by excluding some, or you can say and instead of or, and that will exclude some. And then lookalikes would be if you've already been running ads and you have an audience that you have been targeting, you can do a lookalike based on that audience. Or you can upload a list if you have an email list already, or You've got a list of investors that you've had in the past. In my world, for selling coaching and education, people that have purchased the strategic partnering community, that could be a list that I can put into audience targeting. One thing that I do want to talk about, and I have found, I don't know yet because I'm just now running it, but I'll let you know how this test goes. I'm running an ad on LinkedIn right now. And what I did is I went on Linked Helper and I asked Linked Helper. I first went to LinkedIn and I created a search for multifamily investors, and it brought up some 2,500 people that were had multifamily investor in their title, were in the United States, and had engaged on LinkedIn in the last 30 days. So they were active LinkedIn users. And I asked Linked Helper to pull their contact information so I could export it as a contact list. And out of that, I want to say out of the 2,400, I think it was somewhere around 1,600 had all the contact information. And the really cool thing was that it didn't actually go to LinkedIn to scrape those. It was people that Linked Helper already had in their internal database. So it didn't cost me any credits on LinkedIn at all. And if you're familiar with Linked Helper, you know what I'm talking about. You can only do so many actions per day. It would take you 4 months to do all those actions if it was scraping it on LinkedIn. But because it was internal to Linked Helper's database, I got somewhere around 1,600 leads that were second and third level contacts, not first level. And I was able to export those. That would be a great lookalike audience if I'm targeting multifamily investors. So I uploaded that for my lookalike on LinkedIn when I created my LinkedIn ad. And right now it is creating that lookalike audience for me. So even though the ad's created, I've uploaded the list, it's creating that lookalike. What that means is it's going to take those 1,400 LinkedIn users and it's going to expand the audience to people that are just like them and have behaviors just like them. And that's what I'm targeting on LinkedIn. So I'll let you know how that works out. It's a test. I'm going to run another campaign group, which is what it's called in LinkedIn, an ad group if it's on the other networks. I'm going to run another one for another audience that is everybody that's ever been on my email list for strategic partnering. There's over 5,000 people on that list. And then I'm going to run a third one for just people that have bought strategic partnering. There's about 530 something on that list. And I'm going to create lookalikes from each one of those. And I'm going to run those 3 ad campaigns or 3 ad groups or campaign groups simultaneously to see which audience is the best. They will all 3 have the exact same 3 ads. I'm not going to change the ads at all. I'm using 3 images. So when I said I wasn't going to go through ad framework, I'm giving you an ad framework now. I'm using 3 images for each ad. So there'll be 1 image and the ad, 1 image, the ad, 1 image, the ad. And so what'll happen is the network will test and see which ad is working the best, which image is working the best. Same exact subject line, same subheadline, same call to action, same description, everything for all 9 ads all the way across. So I'll have 1 campaign, 3 ad groups or campaign groups if it's LinkedIn, and 3 ads with each has its own image, but they're identical ads, just different images. That's my initial test. Again, I'll let you know how it works out. That's on LinkedIn right now for a brand new campaign that I'm running for the Master Lease Option Workshop. All right. So that's how we can start to learn and identify this. I said I wasn't going to go into ad framework, and I did. I always do what I say I'm not going to do, but helped you guys. Was that helpful? Or did I just like completely go over everybody's head and that was a total waste of time?
And no, that was super helpful. Thanks.
Thank you, Corinne. You're very nice. All right. So that's a lookalike. That's how you create a lookalike audience. Okay. Broad would just be everybody in the United States. That's a little too broad. You probably want to be a little less broad than that. And then, of course, warm would be your retargeting. So you're retargeting people that have already seen your stuff. That would be warm. Your budget depends on ROAS. Who knows what ROAS stands for? There's 3 of you here. Any of you recognize that acronym? Okay. It is return on ad spend. We want to have a return on that ad spend. Now, I got to be careful what I say here because I could scare you guys away and you'll never do multifamily again, and you'll start to try to figure out what you could sell online. When you're running ads, let's say you have something to sell. Okay, I have education and coaching I could sell. When I'm selling my education and coaching, that return on ad spend for me is 3-to-1. If I cannot get a 3-to-1 return on ad spend, then I stop the ad. All right. That's why we run multiple ads to let the network find which one works the best. You find 1, 2, or 3 that are working, and then you just throw as much money as you can at it if you're getting at least a 3-to-1 ad spend. Okay, that's 300% return on my investment. You're absolutely lucky if you can get a 14% return on multifamily. Or if you go through a full cycle in a syndication, you get a 1 point whatever to a 2 return on equity. Okay, so at least that's a 2x. Here I'm getting at least 3. Consistently, when I've run ads in the past, I've got between 10 and 20x return on my investment. This is the fastest way to wealth, just so you understand that. Now, I'm not telling you not to invest in multifamily. Forget I said that. I just want you to understand how fast you can build your audience if you're doing a lead conversion by running ads. All right. It is extremely freaking powerful. You got to be able to afford it. So we want to make sure that we have a return on our investment. No different than investing in real estate. And it'll ask you placements. It's just all placements. So if it's Google, it will be in the search network. It will be in the audience network. And if it's on YouTube, obviously you're running video to that. Even though you're doing it on YouTube, if you have a video, you can still place that in the audience and search network, not just YouTube. So just because you have a video ad doesn't mean you have to do it on YouTube. You can do it on all their networks. On Facebook, it would be on the feed, the sidebar, Instagram, and then they have a few other things. LinkedIn, you've got instant messaging and feed. TikTok is just TikTok. I haven't run TikTok ads yet, so I don't know really what that is. Matter of fact, I don't even have a TikTok account yet. That's coming. Stay tuned to a theater near you. So I think that covers all those ad networks. Twitter is another one, but I don't know a lot of people using Twitter. I haven't tested Twitter, so I'm not talking about Twitter, but Twitter does have an ad network. Okay, and then of course the creative. Remember I told you in my ads themselves, I have either an image or a video. You want to have some kind of creative. If it's just textual, you're probably not going to get any response. You got to have something that stops somebody from scrolling however they're scrolling on whatever network they're on. All right, that's conversion. So that's what you really are going to focus on when you're working your investor leads. But if you want to get those investors to engage and be qualified, you want to do a cold branding campaign, because now they're learning exactly what you do, how you do it. You're building that trust with them, and they're starting to like you. So now if they're engaging with you, they're a lot more qualified than somebody that is just on a cold conversion ad. Okay, so our campaign objective here on Facebook and Instagram is engagement. So now our whole purpose is we're going to send them to something educational, not necessarily something entertaining. It really needs to be educational, especially in this industry. And we're looking for them to like, share, comment. We want them to engage with that creative, whether it's an image or whether it's a video, or if it's just an article. We want them to engage with it. Okay, one thing you want to do is have some kind of call to action at the end, or it can be at the beginning, that says, what do you want that engagement to be? You don't want to give them multiple options. I see this all the time, and I've been guilty of this in the past, where you say, please don't forget to subscribe to my channel, like this content if you found it, what's the word I'm looking for here? Educational, or it helped you, and share it if you feel it can help somebody else. If you do all of that, you're confusing them. A confused mind never takes action. The real saying is a confused mind never buys, but it's the same thing on any kind of call to action. So what do you want to happen from this? Do you want them to subscribe to your channel? Do you want them to like it? Or do you want them to comment on it? Comments and shares get the most credibility with the network, that social media network. So by asking them to comment, they are more than likely going to share. Or you can ask them to share. If they're sharing, they're probably commenting. All right. But if you're just asking them to subscribe or like, you're probably not going to get the comment and the share. So just try to choose one. Google AdWords, they call it product brand. LinkedIn is called engagement. YouTube, because it's part of Google, is called product brand. And on TikTok, it's called video views or community interaction. Okay. We're getting them to engage. What's really interesting about TikTok, and this is what I've learned, I have not done it because I don't even have a TikTok account yet, but what I've learned is if you do this right with TikTok, you can send a video viral in a heartbeat. Okay, so TikTok is extremely powerful, and do not believe, everybody has this limiting belief that our target market's not on TikTok. They probably are. So if they're under the age of 26, and we have accredited investors that are under the age of 26, they're on TikTok. Okay, that age group, 18 to 26, is on TikTok. All right, so you absolutely want to use TikTok. That doesn't mean there's nobody on TikTok above age 26. That's just TikTokers are age up to 26, and then YouTube above age 26. That's kind of what the numbers tell us today. And you now can use TikTok like you can YouTube. It has become a search engine, and it's becoming the primary search engine for people under 26 years of age. Do not discount TikTok. I'm not anymore. I'm getting TikTok, just so you know. So our content here, remember the last on conversion, it was ad framework. Here it's educational. You can have that call to action, but that call to action needs to be some kind of engagement call to action, like, share, subscribe, or comment. Audience targeting here is layered, meaning we want as many people as possible when doing cold branding. Our budget is tiny on this one because the amount of people that see it, because it's content based and because people are engaging with it, it has a, you can get engagements and clicks and views at a very, very, very cheap price. So our budget here can be very, very small. Placements, here is the news feeds. So whichever ad network it is, so that would be the search network for Google, although you could also use the their content network as well as the search network. And of course, LinkedIn's going to be news feed. YouTube will be, you have in YouTube, you have what's called in video. which are those ads you see at the very beginning of the videos that says skip ad. That's an in video. And then you also have the sidebar. So you'll see sponsored or recommended content along the sidebar on YouTube. Those are the two that you get. So for YouTube, it would be in content. The creative here is video or image. Video is highlighted because video is much more powerful. Okay, people can absorb it very quickly. All right, warm branding. So we've sent them cold branding. They've seen our stuff. Maybe they've engaged with our stuff, but they haven't converted with us yet. So now we want to create a warm branding campaign. So our objective here is now brand awareness. Remember, we did engagement for cold branding. Now we're doing awareness. And the reason we're doing that is because now we can actually limit how many times they're seeing our ad on a weekly basis. And so that's really the reason we're using awareness. With engagement, you cannot do that. You can only do it with awareness, but they're already somewhat aware. So making them more aware by using awareness in this case will help your targeting. So for retargeting on Facebook, Instagram, you use brand awareness. On Google AdWords and YouTube, you use product brand. LinkedIn's brand awareness. And again, with TikTok, video viewer community interaction, it's the same. Our targeting here is stacked warm. What that means is the warm audiences that have been created from the people that have already seen your content, you're going to want to create audiences from that inside those networks, and you're going to stack those audiences so you are only sending the ad to people who have already seen your stuff. This is not cold. This is not somebody who's never seen you before or knows who you are. These are the people that have seen your stuff. Okay, budget here is small to medium, depends on audience size. If you've got a smaller audience, it can be a very small budget. If you're an influencer, it can be a larger budget. Placements will be news feeds, and here have that call to action in the comment. So now our call to action can actually be to a landing page to collect that lead. It doesn't have to be an engagement call to action this time. Now it's a conversion call to action. Frequency cap, that means we don't want any more than 3 to 5 times a week. 3 is probably optimum. So if you can tell the network, we want them to see our ad 3 times a week, where in engagement, you don't have that ability. And it might be 2, 3, 4 weeks before they see your ad again. Here, we're guaranteeing we get at least 3 touches a week with frequency cap. Our creative here, it needs to be video, okay? Should not be image. Once you're doing warm branding, it really needs to be video. All right, any questions on the 2-1-2 strategy? Okay. That audience we create. Inside that audience, even though it's a single audience, that target market, that avatar is going to have multiple personas. So when people talk about an avatar also being a buyer persona, they're actually not doing it correctly. A buyer persona is the behavior of that avatar. So where the avatar might be a busy professional that is looking for passive investments but does not have time to receive phone calls from property management companies, that would be your avatar. But there are going to be multiple personas inside that single avatar. So as far as ads are concerned, we're going to talk about how those personas affect how you run your ads. So the first one is, it's the person that they want the best. Okay. I want the absolute best, right? This is somebody that is definitely interested in status. Okay, they're competitive, they're fast, they're structured, and they make logic-based decisions. All right, so that's one persona. Next is I'm an impulse buyer. Okay, so they not necessarily want the best. Here, they just want anything. They're the ones that when they're driving down the street, retailers love them. It's why when you see retail buildings, they're always on busy streets, and why in rural environments you don't see a lot of retail, because the streets aren't that busy. They need to have so many thousands of cars per day going by because they're attracting impulse buyers. These are fast, unstructured, and makes emotional-based decisions. Okay? They don't make logic-based decisions. They make emotional-based decisions. That doesn't necessarily mean that's good. It just means they're really quick. You have, through your messaging, you have engaged with them on an emotional level. They're going to buy from you in a heartbeat if you've triggered that emotion. Where even though I want the best is competitive, fast, and structured, you gotta give them a little bit more logic. Those features and benefits will attract them. Where the impulse buyer, you need to add meaning to that feature and benefit. What's it mean to them? And then if you could trigger that emotion, they're yours. Next is I'm process driven. Your engineers. They're methodical, slow, structured, and they make logic-based decisions. So just like the I want the best, I'm process driven is the same, only I want the best is competitive and fast, where I'm processed is methodical and slow. And in line with the I'm an impulse buyer is I listen to my heart. Okay. So now they're slow, unstructured, humanistic, and make emotional based decisions. Okay. So these are the ones we really want to watch out for, because these take a really, really long time to get them to engage, but they may not necessarily be who you want engaging. I'll explain that in a second. So the top two, those are your fast buyers or fast lead exchangers. Will give you your information for that lead magnet. And then your slow leads or your slow buyers are the bottom two. The two to the left are logic-based, and the two to the right are emotional-based, okay? So what's that mean to us? Well, your impulse buyers are your fastest buyers. They will buy just on a whim. These are the ones retailers target. They love impulse buyers. You will have some refunds with impulse buyers because they'll get buyer's remorse, or they really don't like what you got because they made too fast of a decision, but they're not the worst buyer. The I listen to my hearts, they are your worst buyers because they get buyer's remorse really bad. So what does that mean when we're attracting leads or we're doing lead engagement for finding investors? These are the ones that will give you a soft commitment after so many months of engaging with you. And then when it comes time to transfer that money into the bank account, they will not do it. All right. These are the ones we don't want. And these are your best buyers. These are your best leads. They're process driven. They're methodical. They're slow. They're structured, and they make logic based decisions. This is who we're looking for. This is our target market. If you can load your list up with process-driven leads, you will be just fine. Does this make sense to everybody? Any questions about this? Go ahead,
No,
Sarita.
sir.
Okay.
Oh, no.
Roger that. All right. So let's talk about the upside framework. This is an acronym. Each one of these letters represents something. So again, we're now digging deeper into those buyer personas. Same audience. We still have one audience. All right. But not only are they fast or slow, logic or emotional, we also have all of these to deal with. The first is our cold audience. They are unaware. They are unaware of their problem or their desire. They are unaware of you. They are unaware of your solution. They're just lost in the weeds. Okay, these are the ones we're targeting with our cold message, right? Our objective being the engagement. That's unaware. The next group is problem or desire aware. So they still don't know who you are, but they know they have a problem. They know they have a desire. They just don't know there's a solution out there for it. Again, this is your engagement objective. Then we have those that are solution aware. So they know they have a problem. They know there's a solution for it, and they're actually looking. They're actively looking for that solution. The difference between the P and the S is the problem and desire aware don't know there's a solution, so they're not looking for it. The solution aware are the same people, but know there's a solution, so they're actively looking for that solution. Okay, so if they're passive investors that know that they can passively invest in real estate or multifamily real estate, they still don't know who you are, but they're actively looking for ways to put their money into a deal. They are solution aware. The next one is your solution aware. And with solution aware, those are your conversion objective. That's your conversion objective group. Okay. Your solution aware is also conversion objective, because now not only do they know they have a problem or desire, not only do they know there's a solution available, but they know you have a solution that can help them. Now all you have to do is convince them that your solution is the best solution. So your solution aware is conversion objective as well as retargeting. Okay, they are a perfect retargeting audience. And finally, we have deal aware. That means that they know you have an offer. Okay, they know what your price is. They know what your investment offering is. They are deal aware. These are your most engaged, your best leads are your deal aware. They are retargeting audience. So of your personas, these are in addition to whether they're slow or fast, whether they are logical or emotional. Then we add these. All right. So what does this look like in our audience? So let's say we have an audience of 100,000. Our unaware are the second largest, about 250K. Now this is a study that's been done across all ad networks over the last 15 years. So unaware, about 250,000. Problem aware, but they don't know there's a solution out there. They're the largest. So you have to educate them. Solution aware, but don't know your solution yet, about 200,000. Your solution aware, 90,000. And then ones that actually have engaged with your solution, know what the investment is, know what their investment is, what their involvement's going to be. Those are the deal aware. They are the smallest of the entire pie. Okay, so we got 25% are unaware, 45% are problem aware, 20% are solution aware, and then 9% are your solution aware, and 1% are deal aware. Okay, make sense? Did I do that? 10%. Because it's not 90. Yeah, 1%. I did those percentages right. All right, so what's this look like? So unaware, our objective is engagement. Our budget is low, and you'll learn that in a second. We already know that. Problem aware is now our objective is either conversion or engagement. So your problem aware are going to be where your fast buyers come from. Okay, so we want conversion objective. It's why we run conversion objectives with the engagement objective, that 2, remember 2, 1, 2 for cold audiences. The reason we're running a conversion objective to a cold audience is because we're going after the fast buyer and we're going after the problem aware. Okay. They are the ones that are actually going to give you the contact information or purchase what you have. Solution aware, conversion objective. Okay. So now we're here. We're no longer running an engagement objective to them. They are solution objective. They are solution aware. So we're just running conversion objectives to them, trying to get their lead contact information. And of course, our budget depends on that return on ad spend. You're solution aware. So now we're conversion objective as well as retargeting. So that is here. Budget depends on return on ad spend. And the reason it says low is because when you're retargeting, you are going with a lower budget when you're doing the awareness campaign. Awareness is low, conversion is higher. So that's where the low comes from. And then finally, deal aware. These are the ones that know your solution, know your cost, know your investment, know what they have to do. They just haven't done it yet. These are the best ones. And this is conversion and retargeting again, where the return on ad spend depends on return on ad spend. If it's conversion, and if it's awareness, it's low. So for engagement, we do the U's and the P's. For conversion, we do the S and the P's. And for retargeting, we go from S all the way to D. Really better for just Y's and D's, but you can retarget S's as well. Okay, so they're really good for that. All right, any questions about audience or persona? What's all this mess cost? So for cold branding, you're looking at maybe $5 or $10 a day, not much at all. They got to be engagement and video views. Okay, so engagement, if it's on Facebook or Google or Instagram, although Instagram could have video views. If it's YouTube or TikTok, then it's video views. Although one could say Instagram has Instagram stories, which can be videos, and Facebook even has videos through Reels. So if you're running ads to those, they could also be video views. The only ones you don't do, well, you can also do engagement for any of them because you're either asking them to subscribe or like or share or comment. I would recommend shares and comments before I would do subscribes or likes. So CPP, that's cost per purchase. CPL is cost per lead, and CPVV is cost per video view. So on average, over the last 15 years, this has been studied, of course, with videos. It hasn't been 15 years. It's only been, 7, 8 years for videos. If you're selling something, you're looking at a cost per purchase here of about $300. Because again, it's cold branding. We're just engaging. But remember, we're also doing a conversion campaign with it. So that conversion campaign will pull purchases or leads, whatever it is you're doing. So cost per lead and cost per purchase in your case might be that scheduled appointment. That can be the same as a purchase. So where here it might cost you $300 to get an appointment, $45 to get a lead, 1 cent to get that video view to get the engagement. When we get to the conversion campaign, your cost to get an appointment and your cost to get a lead go way down, because now we're asking that ad network to optimize for a conversion event, for a lead, for a sale. And you can optimize for an appointment or an application filled out or something like that. Doesn't always have to be for a sale. I would recommend just doing your campaigns for leads, not necessarily for appointments when you're getting started. As you get further into running ads and you're comfortable with it and you're becoming an expert at that network, you can then start running your conversion events for scheduled appointments. But you can see for leads, it goes way down. Sales, so if I'm targeting or I'm telling Facebook or I'm telling Google or I'm telling YouTube or TikTok that my conversion is sales, which would be that appointment scheduled, I can get it all the way down to $40, where up here it's $300. Versus if it's leads, I can get leads for $6, appointments for $70. All right. And then look at our video views. They go way down or they go way up, considering it's only 1 cent here. It's 20 cents to 18 cents here, because the ad network isn't optimizing for video views. It's optimizing for the conversion event. Does that make sense? Here we're optimizing for the video view. Here we're optimizing for the conversions. All right. And that's why the ad costs are the way they are. Now, if we get into warm branding, which is our awareness, now we had engagement up here. We got awareness down here, as well as our conversion. So we're doing awareness and conversion. Here we're doing engagement and conversion. So for awareness, same thing. It can even be the same exact ad. If you're running an image ad here, I'd change this to a video ad. But if you're running a video ad here for engagement, just use the same ad here. You're only targeting now people that have already seen your stuff, your pages, your videos, your articles, your posts, whatever. Okay, use that same ad here. So now our cost per application or our cost per appointment goes back up. Our cost per lead goes back up, but our cost per video view goes back down. All right. Now, this actually is not correct, because this is in line with this in the fact that they're a warm audience. So I actually did this wrong. Your cost per purchase and your cost per lead are going to be the same here, and your cost per video view are going to be the same here. That's the power of retargeting. I actually did that incorrectly. So when you're retargeting, they already know who you are. They're already solution aware, and you may not get exactly this, but you get very close to it here. So this is wrong. Ignore this. It actually would be a lot lower than that, because they already know who you are. Now you're throwing a call to action at them, and they're going to act faster than they would here or here. Okay? Make sense? All righty then. So let's talk about, that's the 2-1-2 strategy. Okay? That is the framework or the strategy for running ads across any ad network. So let's talk about running conversion ads. I said for owners. It should say for investors, not for owners. Couple of mistakes here. Let's run an advertising strategy for investors using the conversion objective. Now, honestly, it's identical for owners. Doesn't matter if it's investors or owners. This strategy is absolutely identical. Okay. So here are, I chose 2 ad networks in this case. We got LinkedIn and we got Facebook. All right. Our ad is right here. So our ad says, are you seeing a lot of multifamily opportunities to invest in, but you don't know who to trust? Download our free sponsor vetting checklist. Now, does that have anything to do with an opportunity that is currently on the market? Or does it talk about any returns that you could get on a deal? Okay, none of that. Are you violating any SEC regulations by targeting non-accredited investors with this ad? That's a question to you guys. Are we violating any SEC regulations by targeting investors with an ad that says, are you seeing a lot of multifamily opportunities to invest in, but you don't know who to trust? Download our free sponsor vetting checklist. Does that violate SEC regulations?
No.
Of course not. By me just putting it here should tell you no. Come on, people. Work with me here. Thank you, Jesus. All right. So I highly, highly, highly recommend using something like this. Now, if you're raising capital for a deal that's currently active and it is a 506C opportunity that does allow you to advertise. If you are a co-sponsor and you are just capital raising, I would not run that ad. You are putting yourself out there as a investment advisor. Don't make that mistake. If you're the primary sponsor on the deal and this is your deal, you can run it all day long, because as the owner of the investment or as the owner of the LLC, you are allowed to raise capital for your own deal. But when you're brought in as a capital raiser and your only job is to raise money, if you are running ads, you are telling the SEC that I am violating your regulations because I do not have a FINRA license. I do not ever recommend you doing that. The way to do it and use ads to get to get a larger number of investors quicker is by doing it this way, by letting them know that you have something that would be valuable to them. You're obviously targeting them because it says multifamily opportunities, and you're obviously targeting passive investors because you are saying download our sponsor vetting checklist. You want to invest, but you don't know who to invest with. Not what deal to invest in, but who to invest with. Here's our sponsor vetting checklist. This does not violate any ad networks as far as their advertising policies, and it does not violate SEC regulations. Okay, does that make sense to everybody?
Hey, David.
Yeah, go ahead, Jesus.
Would that apply the same thing? Let's say that you're gonna use like that you have set up like a fund of funds with like a crowd fund, I guess, for non-accredited investors. Would that still?
You cannot run a fund of fund with non-accredited investors. They must be accredited.
Got it. Okay.
Okay. Now, you can look for, if you're building that fund and you are looking to invest with multifamily sponsors as a co-sponsor, and you want to have the capital raised already, or at least all the soft commitments, maybe not the money committed yet, and you want to do a fund-to-fund structure, then it is okay to do that, but you must target accredited investors only. You cannot have non-accredited investors in your fund if it is a fund-to-fund model. You can have non-accredited investors in your fund if the fund is the primary sponsor on the deal. It's your deal. You found it, it's your deal. Then you can have non-accredited. But if you're just investing in somebody else's LLC, it's not your deal, that is illegal. You cannot do that under the 1940 Investment Act. Make sense?
Okay, so only if it's your deal, you could use that fund of funds to fund the deal. But can you also use other people's fund of fund for the accredited investors, or they have to be non-accredited investors?
If it is a fund, they must be accredited.
Okay.
If you have a fund and you're investing in your own deal, that's not a fund of fund. What fund of fund means is an entity is a fund. An LLC owns, an LLC is an investment company, say a private equity company. You put a fund together. That's one LLC. Then somebody goes and finds a deal. They're going to buy that deal under another LLC. They're the primary sponsor. They own that deal. They say, hey, we need money to come to our deal. You come in as a co-sponsor with your fund. You're not investing in the deal. You're investing in their LLC. That's where the term fund of fund comes from. That LLC that's buying the property, or the sponsor that's buying that property, that's one fund. You're another fund. That's a fund of fund. You're actually not investing in the property. You're investing in the LLC. Does that make sense?
Yes, sir.
That's just like passive investors. Passive investors aren't actually investing in the properties. They're investing in the LLCs that own the properties.
Got it.
But nobody talks about that because then it wouldn't be attractive to passive investors. Okay, makes sense?
Thank you.
All right,
Yes,
good.
sir.
All right, so here's the strategy. And it's actually pretty powerful. So because we're giving away a sponsor vetting checklist, and just so you guys know that you actually have this landing page and this lead magnet already in your Acquisition Pro account, as well as this thank you page. They're already there, okay? So is the follow-up sequence to get them to get this download, all right? To build that relationship with them. Okay, we already have all this. So the follow-up sequence is actually to get them to schedule a call with you. What you don't have in there, but is available, is something you can do in addition, is those that come in and download your lead magnet. If you capture their phone number and they check the little box that says they agree, you could send them messages and reach out to them by phone. You're going to send them a text. So they'll get an email and a text at the same time. The text basically is just going to say, did you get the download? That's all it is. It's a yes or no question. Did you get the download? We want them to respond because we want to have a conversation with them. That's how we build relationships. Start to have that conversation. All right. So 5% will respond, 95% won't. So what do we do with the 95% that won't? You can do one of two things. There is and it's in your account, it's just not active. There is a thing called the Fast 5 framework or workflow that is in everybody's Acquisition Pro account. What it can do is within the first 5 minutes. So if after 3 minutes, the prospect does not respond, or the lead, because they're now a lead, the lead does not respond, then you can receive a phone call from Acquisition Pro that says a lead just downloaded your, or just requested to download your sponsor vetting checklist. Would you like to call them? They did not, or it would say, a lead just requested to download the sponsor vetting checklist. They did not respond to the text. Would you like to call them? If you want the system to call, you press any button, it will dial them and then connect the two of you together if they answer. If they don't answer, then the system will automatically send them a voicemail. Okay, and that voicemail can be pre-recorded in the workflow. All this is automated. If you don't want to receive that call, if you're somebody like Jesus that might be on a fire somewhere, then just skip this part. Instead of, and I'd even recommend skipping this part anyway, because most people don't want to do this, although it's very, very powerful if they answer the phone. But if you don't want to ring the person because you haven't had a chance to research them at all, then skip this part and just send them straight to a ringless voicemail. Now, here's the power. Here's where your target market lies. If they respond to that ringless voicemail, either by SMS, by email, or they try to call you back, that's your target market. That is who is investing in your deal right there. Because you've triggered them somehow, some way. They are looking for what you want, or they would not have responded. People don't just respond because they got a voicemail. Matter of fact, they delete more voicemails than they listen to. Most people don't even listen to voicemails, which are why the text is so important. But what people do get, at least I do, because I don't listen to voicemails, is I'll get a transcription of that voicemail to my phone. I don't know if Apple does that or not. Android does that. So I would recommend maybe taking out the phone call and just going straight to ringless voicemail. And if they respond, that is your target market. but all of them lead towards getting on your calendar. Okay. You've got the email campaign that's leading them towards your calendar, and you have the phone and SMS and ringless voicemail leading them to your calendar. All right. Those that schedule an appointment with you, expect that only about 70% are actually going to join the call. And then of the ones that join the call, if you get them in there and you can offer them your opportunity, whether that opportunity is creating a blind fund like Jesus was talking about because you're building a private equity company, or whether you actually have an opportunity or you're just trying to build a relationship with them to get them to a soft commitment, you should be able to get about 70% of the people to say yes. And of those that say yes, only 75% of them will actually convert. The industry says it's 50%, but if you do this the right way, if you've engaged with them and you've had cold traffic, you've done your cold campaign, your cold engagement campaign, and you've done your warm retargeting campaign, and you've done your conversion campaign, and now you've got them in through this ecosystem, by the time you get to asking for that soft commitment, they know, like, and trust you, or they would not be this far. So I have said you will get a 75% conversion if you've done all this. If they're flat cold and it's the first time they've come in and they've never seen any of your other stuff, that's where that 50% kind of spikes in. Okay. Does that make sense? All right. Final word about ads. Read the terms and conditions and advertising policies. If you violate the advertising policies, they will ban your account. 9 times out of 10, well, I'd say 99 times out of 100, you can get your account back. You got to do some begging and pleading and some hand kissing and some feet rubbing, but you can get your ad account back. Unless you did what I did, which I still don't know what I did to this day, and get permanently banned. It does happen. Google's done it. Facebook's done it. I've been in jail by both of them. I got out of jail in Google and they let me have my ad account back after telling me I was permanently banned. Facebook, I'm on death row. They are not letting me in. They have permanently banned me. It's been over 3.5 years. I'm coming up on 4 years in January. So I'm on death row with Facebook as far as the ad network is concerned. You guys know I still have my Facebook account. I still have my groups and my pages and everything else, but I cannot run ads on Facebook. That's what my daughter's for. My daughter and I are starting ad campaigns on Facebook through her account, not mine. So read the terms and conditions and the advertising policies. What I would really recommend is that you take a course on whatever ad network you're going to use and only use one. You'll see that here in a second. Become an expert in that ad network if you're wanting to run ads. If you want to accelerate what you're doing, run ads. Got to have a budget for it. But if you want to accelerate what you're doing, you really, really, really want to be running ads. But you got to know what you're doing, and don't just hire an advertising agency to do it for you. They will screw you. They're in it for the money. They're not in it for you. Okay. Basically, with the terms and conditions, and the really big ones here is no income or investment performance claims. So I can't say, join the strategic partnering community and in 6 months, you'll make $50,000 on a acquisition fee. If I said that, my ad would be declined. I could get banned from the network if I don't fix it properly. Investment performance claims are, if you want in this deal, you can get a 14% internal rate of return and a 2.3 equity multiple. Those are those are investment performance claims. The ad will get denied and you can get your account banned. Start with one ad network and master it first. I've said that. And that is with Facebook, Instagram, because they are the same. LinkedIn, Google, YouTube, again, the same. And TikTok. Homework. Create content to promote engagement. Okay. You can just run conversion ads if you want to. You do not have to do the engagement for cold or the retargeting for warm or the awareness. You don't have to do that, but you will do so much better. You'll get much more targeted people, and you'll have fewer conversations that will give you more opportunity if you use the 2-1-2 strategy. So use social media channels to create that engagement. Attend events where your avatar hangs out. Remember, your avatar is your target market. Your persona is multiple personalities inside of your avatar. Use automations for lead generation and conversions. We do that through Acquisition Pro. Use Linked Helper and Group Kit to automate your leads into Acquisition Pro. We talked about that in session 1. Become an expert on one ad network. I've said this a couple of times already. First, remember, you're not pitching anything. You're offering an opportunity. Schedule appointments and gain soft commitments. Okay. And then there was a session 6.